Welcome to the daily update, where I'll go over the action in the market for Tuesday, June 24th, and we'll see how things look for Wednesday, June 25th. Before diving into today's video, if you find it helpful, consider a 30-day free trial to the SPX investing program. This trial lets you explore my unique approach to market analysis. Full-length daily and weekly videos are available on a delayed basis after the market closes. For immediate access, become a member by clicking on the link below. Okay, had a solid update. Still not trending. We just cannot seem to get the ADX to cross back above its moving average. It's close, but we need to see more follow-through for a trend to actually be developing. And then there's been some positive news geopolitically about a ceasefire between Israel and Iran. And then immediately after that, they seem to defy it. It was kind of complicated about, okay, Israel can do this for a while, and then a few hours later, Iran can do that. In the meantime, you've got Trump dropping his own bombs before he gets on an airplane. So, yeah, it's kind of emotional right now, and the market pretty much is reacting positively. Now, about 8 or 9 hours before the market opens, the futures are unchanged. We're not seeing any kind of a big move or down move, pretty much settling about where things closed, but that can always change as news comes to the surface and Europe and Asia and all these other places get a chance to react to things. All right, so right at the open, we had a gap higher open. The futures were positive. We were up about 0.5% to 0.75%, and then we just started to build on that as we were approaching the open. So we opened above our one at 6,055. So that 60-50 level that we've been dealing with last week and the week before, we're above that now. So we've been able to break above that area of resistance, and that's seen as positive. We climbed up to R2 at 6,085, and we just kept going. And we finally hit resistance at a round number. We're back close to the 6,100 level. We're not very far away from the all-time high. And now everybody's thinking, okay, are we going to be able to do that? We'll see. And then by the time we closed, we were a little bit below 6,100. And we were up 1.11%. And now, for the second day in a row, without it being options expiration or the end of the month or things like that, we're above average with volume. So that's picking up. We're seeing a little bit more conviction there. We are still positive in the short, excuse me, in the short, intermediate, and long term. Interest rates are coming down, so that's been helping stocks. The dollar's also been declining, which is helping stocks. Jerome Powell had his first day of testimony before Congress. He goes before the House one day and before the Senate the next day. Didn't really offer any insight there. I'll go through a few of the comments that he offered. And the real forefront of the news right now is what's going on with Israel, Iran, and the U.S. involvement with that. There were reports that maybe all the bombs didn't take out all the nuclear facilities. Then there's other reports saying yes, they were. So we're still waiting for some of that to be clarified. So yeah, it's just kind of crazy right now. It's been crazy for a long time and probably going to get even more crazy. So President Trump did announce a ceasefire between Israel and Iran. And I have a question mark at the end because it's like, okay, did they really have a deal? Was that just President Trump thinking this is what I want to have happen and this is how I negotiate? I'm going to go ahead and announce this. Or is there something more substantial between the two? And we haven't really been talking about this much, but the big, beautiful bill they're trying to get, which is a reconciliation bill, not a budget bill. They're trying to get that passed and to the president by July 4th. And then the job of the president would be to sign that. Then Fed Chair Powell did have his testimony. He said that tariff increases will likely push up prices this year. Okay. Now, we haven't seen that yet, but that can take some time to work its way through, and that could happen, which might impact economic activity. but he also showed an open mind on future policy action. What that means is we don't know what to do. So we're just kind of looking at different things and we'll have to make a decision at some point. He also conceded that there are many paths. That also means he doesn't know what's going on. And it's complicated right now. And it's not like Powell and Trump are buddies. Even though Trump appointed him, they've kind of turned into pretty severe enemies with each other, especially with Trump throwing words Powell's way. One of which is inflation could be cooler than expected, which would suggest that the Fed would cut sooner. So open-ended, really nothing decisive there. We think the tariffs might push inflation up, but things might be better than we thought, and we could actually try to cut rates. So pretty much a broad-based rally in Tuesday's session. The mega caps had a good day. And the semiconductors, and I'll have the charts to show you this, high beta stocks, the stocks that tend to outperform when we're going up, they also outperform when we're going down, meaning they go down faster. And small caps had a pretty good day, but they're still pretty much range bound. Oil's really going down. We were in the mid 70s. Now we're down into the mid 60s. So that's really been coming down as a lot of the fears that have been anticipated with that have been alleviated, at least for right now. And we're back below 20 still. We're getting down into the 17 range. Now, if we have an update on Wednesday, I'll probably drop this from the list. I usually only focus on it when we're around 20 and then definitely when we get above 20 because that's more negative for the market. And the parabolic SAR just turned negative last week. Now it's switched back to positive. So this is another primary indicator that's looking better. And we do have a golden cross with the NASDAQ 100. I pointed that out in yesterday's video. It looked like we were close. Unless we had a big, massive downward move, that was going to happen. So that's switching the NASDAQ 100 trend back to positive. And then we're getting more of our short-term indicators on the list suggesting good short-term momentum, where the new additions are the Williams percent R. The Stochn RSI is not there yet, but the Williams percent R is there, the CCI 14 and 20, and the stochastics. So they are showing things improving. Now we're still getting mixed pictures with the stochastics chart. Some are looking more positive, some are looking more negative. We're also extreme with the slope oscillator, but we're still negative. Now, the momentum oscillators have not really switched. They're trying to improve a little bit, but they're not quite there yet. And now we're back to being far away from the 20-period moving average as measured by the boom indicator. Also, still looking pretty extreme with that rate of change going back 50 periods because it's calculating from the lows set back in April. The PMO, which is still below its moving average, but it's still extreme positive. A lot of our momentum oscillators are negative as well, but still giving extreme positive readings. The Sean trend meter getting up into a little bit more positive area of the chart where we start to watch it. And then with the upward move, we're outside of the upper Bollinger Band. So the percent B indicator is now flashing, and we're back to being far away from the 50-period moving average. All right, no changes here because the Fed really does. It's like, well, this could happen, that could happen. There's not a lot of real decisiveness right now. So they're kind of just sticking with the same overall scenario. The dollar continues to decline, which is helping stocks. Interest rates are down. We're at 4.3% with the 10-year yield. Sentiment is positive. We're at 56. We actually ticked down a notch from the last reading that I saw of 57. We're still not trending, and I'll show you the charts. They're trying to turn up, but we need to see more follow through. What would kill the trend right now is we had a good day up on Monday and Tuesday, and now if we just go sideways or actually see a bit of a decline, that's going to keep the ADX from really being able to turn up. But we are positive with the green line above the red line. We're still below 20. We're still below the moving average. The bias is positive, and because of the ADX, I'm still keeping the momentum at mixed until we really start to see some kind of a trend, and it's looking like it could be positive. If it develops, then I would switch the momentum over. So we did get a few economic reports, but none of them were real major as far as what's coming out. The current account balance down more than anticipated, minus than it was anticipated, down to minus 450.2 billion. That's more than the minus 312 billion from last time. The FHFA Housing Price Index was down 0.4%. They thought it would be unchanged, just like what we saw last time. The Case-Shiller Price Home Index is up 3.4%. They expected it to be up 4.1%, which is what we saw last time. So that was weaker than expected. Consumer confidence, weaker than expected. They thought it would come in at 99. It came in at 93. So this taken together, we're seeing weaker than expected economic reports continue, which the market might like that because that might mean that the Fed comes in and cuts rates to try to stimulate things in the economy. Then if you go back a year ago, the index was at 97.8. So 93 is not a real solid reading given the context and all the chart there. So here is the month over month change with the price index where it's actually declining, where it had been going up but trailing off. Now we're actually seeing, according to this chart, where the prices are coming down. And then year over year, actually, it's still positive, but it's coming down from previous readings. Then the Case-Shiller home price index continues to go up. So we're seeing a bit of contradiction there. Consumer confidence, it had been improving. Where we look at the blue line, that's the total reading, the main number. It ticked down here where they thought it was going to go up. And then we look at how people are feeling right now. That's the purple line, not feeling so good. And then looking out into the future, also not looking as positive there. Then we get this every Wednesday, the overbought, oversold composite. We're up at 73 right now. That's a fairly high reading, but we really pay attention if we get above 80 and above. So we're still kind of in a comfortable spot there, at least with this chart. Then we seem to be getting a lot of these lately. We look at the PE ratio for the S&P 500, which 20 and above is considered to be expensive. We're at 22 with the S&P 500. And then we have staples, which did not have a good day on Tuesday, and industrials and discretionary as well as tech. These are above the PE ratio that we're getting for the S&P. And then we still have energy down here at the bottom. And it's getting hit now because oil's going down, and so the energy sector is going down as well. The equity positioning right now just shows, since we hit the lows back in April, where more folks are continuing to get into stocks. And then oil, kind of a lot of people were starting to get into oil that are probably seeing some pretty significant losses right now because they thought it was going to just continue to go up. And it did there for a while. It got up into the mid 70s. Even intraday, it was in the high 70s, but we're pretty much even right now. And then gold near a record high. I don't know why they're showing this. We've been just chopping sideways with gold. Then systematic strategies, this is where you use a basic system. We are seeing an improvement there with that, but it's still below zero. And then the recession risk is declined but remains above normal levels. Okay, so we're still kind of going back and forth. Bloomberg consensus has us at about a 40% chance of going into a recession. Goldman Sachs is now down to a 30% chance. And oil, and see this, a lot of these charts were posted thinking oil was just going to go to the moon. Actually, it's going the other way here. It says we still had to go up quite a bit more to have more of an impact on stocks. Okay, they're just trying to show the difference between the S&P 500 and the price of oil. Well, now this is coming back down, so it's even widening that gap more. Mastering the stock market is challenging and can take decades to achieve. Most beginner traders and investors feel overwhelmed and often fail. Stay ahead with the SPX investing program. Members gain access to the full program. Other options include immediate access to videos as they become available. Alternatively, the daily and weekly newsletters may be helpful. Click on the link below to find out what's best for you. All right, so it was a solid day. We gapped higher above R1, made it up to R2. We stalled there for a little bit, and then we just worked our way up to 6,100. That's a psychological number, which is now turning into a technical number. And then we saw a little bit of a drop off going into the close, and we're pretty much flat in the initial overnight session, and things were positive. We saw the initial overnight session, it was flat. Then this idea that the ceasefire was coming out, that really helped the futures, which carried over into the cash session. And we're seeing more even now between growth and value on the intraday chart. They're both going up, so that's positive. but we're not seeing where the blue line is that more, is not much above the red line right now. And we did see a bit of an improvement, but we're just getting back to the high end of the range with the S&P growth to value intraday chart. So end of day growth was up about twice as much as value. Mid caps were up more and small caps were up more. So seeing a little bit of improvement with the small cap growth to value ratio. And you can see the small caps, yeah, they were up. They had a good day, but we really haven't broken out of this range, and we've been in these price areas before. And we are looking better here with the mid caps, but again, they're just kind of at the high end of the range right now and improving with the S&P growth to value ratio, but not breaking out to a new high. We've been at this area before, but we are still in an uptrend. So, I mean, this is looking solid, but not really a breakout appearance right now. And not much of a change. We're still kind of going sideways here, but looking positive with the growth to value ratio here. This, I show this periodically. This is value to growth. So when this is going down, that's more positive. And instead of just looking at growth, we look at tech, which is the biggest part of growth. This going down is more positive for the market. And then looking at discretionary to staples ratio, still above the moving average, improving. But again, even with discretionary, we're not even back to these previous highs that we set earlier on. So here is the trend. We're not quite there. If you look at the numbers over on the left, the ADX is still below the moving average. It hasn't crossed above it yet. Now we're positive. We were getting really close to a negative cross, and it looked like, okay, with the escalation of things between Israel and Iran, U.S. involvement, oil going up, it looked like things were developing into something kind of negative on the charts, but we weren't quite there yet. And then so far anyway, Monday and Tuesday session, we've been able to bounce up out of that. And so we see the green line coming up and the red line going down. Here's the intermediate term trend, still below the moving average, but still positive. And we are above average with volume here. Again, not very much, but we're at least showing some green histogram bars here. We are dropping as far as the VIX. If we continue to drop, I'll probably take it out of the list that we've been watching before. That's more positive when the VIX is going down. We're also seeing the VIX of the VIX drop coming down in below the moving averages. And the momentum is still positive, but you can see the MACD is trying to roll over since we had that big move down with the VIX. The skew index is still generating something. The market is anticipating some kind of a big move. Maybe it's to the upside. People are buying lots of calls here that are out of the money, hoping that we're going to go up and they'll actually be at the money or possibly even going in the money. So the market is still anticipating this. Plus, we're coming up to the end. It'll be Monday, but we're coming up to the end of June, which will be the end of the month and the end of the quarter. And some crazy things can happen right around that time with window dressing and repositioning and all of that. So we're getting set now to finish out the second quarter. All right, so we declined with this fear gauge. We also declined with this other fear gauge. So those are confirming each other. Just a little bit of a tick up here with the equity put call ratio. We're going up slightly with the 5-day chart, and we're just up barely here with the 10-day chart. And the risk on to risk off ratio continues to go up. That's positive. And we saw a lot of the risk on, the high beta stocks really outperforming. And that's when this ratio goes up. And the high beta versus low beta, when this is going up, that's also more positive. And this is showing some real strength now. And coming down a little bit, but still above the band with volatility risk premium. And we're actually setting a new all-time high here with the advanced decline line based on price. Not quite there, excuse me, based on volume. We're not quite there based on price. And above zero and going up, but not showing an awful lot of strength now with the 10-day advanced decline line oscillator. We're back above zero with the short-term advanced decline ratio. That's the blue line. We were above that, and we're just continuing to go up. So that's positive. And we're seeing more new highs and virtually no new lows, but we haven't quite started to turn up with the 5-day chart, and we're just leveling off and slightly declining with the 10-day moving average chart. Now, the accumulation distribution is back to positive again. We're above the red line. We're above the moving average with the boom indicator. So that's looking more short-term and longer-term. They are confirming each other. We're turning positive again with the Chaikin money flow. We were flat after Monday. The red line was flat. Now it's starting to turn back up. And we were going up with the Chaikin oscillator, but still below the moving average. Now we're above the moving average. So all three of our smart money indicators are now positive. The vortex continues to be positive, and I wanted to show the advanced decline lines. Here's the cumulative advanced decline line for the S&P based on price, holding up but not really breaking out to an all-time high yet based on price. But we are setting a new high here based on volume. And then the other advanced decline lines were above all the moving averages with all the indexes, and the NYSE cumulative advanced decline line breaking out to a new high, breaking out to a new high with the regular NYSE advanced decline line also to a new high here, which is this is another advanced decline line, but it's calculated slightly differently. And then we break it out based on stock still, or the NYSE common stock. Still haven't really broken out here. We're not quite back to setting a new high here based on volume. We're above 50 and going up with those stocks in the S&P above their 20 period moving average. And the 50, which is held up better, that's continuing to look positive. The 100 is going up, and we're going up further above 50 with the 200 period moving average study. So, and again, it's kind of hard because we've already got the July pivots drawn in here, but we are breaking out. We broke above this pivot point here. That's good. And you can see we're within fairly close distance here of the February 19th all-time high. We'll see. Are we going to be able to come up here and then will it be rejected and we'll come back down? Are we going to be able to go and set a new all-time high and possibly test some of this overhead resistance that we see here? And yet again, down below, we are above the moving average with volume. Looking good with the 20, 50, and 200 period moving averages for the S&P. Not quite extreme yet with the Stochk RSI, but much improved. Where we are extreme here with the Williams percent R, the CCI 14, and the CCI 20. Looking positive in the short-term stochastic, turning back above the moving average with the intermediate term, turning up, but still negative, however, still extreme positive at the same time with the long-term stochastic. Crossing back above the midpoint with the force index, showing some improvement here with the short-term trend with the moving averages based on 20 periods. We needed this to get back above these lines and see the lines to turn back up. And as of right now, that is happening. And we're getting up into the high end of the +2 channel with the standard deviations chart. We get extreme if we go up into the +3 channel. And the balance of power, not moving all that much, but still positive. And we're getting back above the green fluorescent moving average, the 10 period simple moving average. And now that's starting to turn up. We're positive with the go, no go with the darker blue bars. And we're not quite back up to the, well, I guess we are up here. We're starting to exceed the highest high value here. So this chart's looking fairly positive. We're positive with the Landry light. We're positive with the proper order with an uptrend going on there. TTM squeeze though, it's like, what? Something's going on. I'm going to continue to be negative. It is darker blue and declining. And coming up a little bit here, the rate of change going back 50 periods. That way, it's still extreme and still dancing just a little bit above zero with the ease of movement. We are positive with the Arun since the oscillator's above zero and going up. We crossed back above zero with the S&P McClellan oscillator. So we were a little bit above zero after Monday. Now we're more positive after Tuesday. So that's turning the summation index based on price up, and we are going up based on volume. So these charts are positive now. And we were just a little bit under zero after Monday with the NYSE McClellan oscillator. Now we're looking more positive here. So it's hard to see, but we're starting to turn back up with the summation index based on price and volume for the summation index for the NYSE. How many times can I say summation index? The Swindle Trading Oscillator looking positive, above zero based on price and volume and advancing, where we haven't turned up yet. It takes momentum oscillators, momentum, so you have to see how things are moving over a period of time. We're improving here, but we're still below the moving average and still giving an extreme positive reading. We're turning up, but still below the moving average based on price. We're coming back up to the moving average and slightly above it here based on volume. And that could be positive when we see volume leading price. And improving here with the PMOs that are rising. The buy signals are now going up, but not quite back up to 50. A little bit of a turn up here with the PMOs that are above zero. Positive with the Elder's Impulse system for the S&P. And here we are with the parabolic SAR. The dot is now underneath. That has turned back to positive. And still kind of trending lower here with the slope oscillator and right about at the green line, giving us an extreme reading. Turning up, but still negative with the MACD. So our short-term oscillators, the TSI is actually improving. It's not quite above its moving average where it's going up though, where the slope is still going down. Then the intermediate term oscillators, the MACD, PMO, and PPO turning up, but still below their moving average. The TRIX and KST, the long-term oscillators, they continue to decline. And we're still below the red line here with the Copic curve. And we're looking a little more positive. We're getting into this darker green area with the Sean trend meter. Still above 50 with the money flow, above 50 with the ultimate oscillator, above the moving average with on balance volume. And here's the percent B. We closed outside of the upper Bollinger Band. That tends to not happen very much. And when it does, it tends to not last very long. Now, it doesn't necessarily mean we're going to pull back. It just might take a little bit of time for the Bollinger Band to catch up with price, or price may end up declining, or a combination of the two. We're above 50 and going up, but not extreme with the RSI 14 and the RSI 9. And we're back to looking better here with the intermediate term trend. We were getting concerned. We were coming down to this blue line, and the longer we stayed down here, the more these lines were prone to rolling over, especially the red line. Now we're back above the red line. So this is showing the intermediate term trend holding up. We're above all the plotted moving averages. And we did come down and use the 20 period there for support for a couple of days, but now we're starting to get back above that. We are far away, though, from the 20 period moving average as measured by the boom indicator, and we're getting far away from the 50 period moving average. And we're improving. We're actually turning slightly positive with the bullish percent index. We saw enough of an upward move, and we're slightly above the moving average. But not really much of a change here with the NYSE bullish percent index, even though it's still positive. It's above 50. And we're turning back up with the NASDAQ 100 bullish percent index. So the bigger stocks are seeing more buy signals being generated. Looking good here. We're up over 2% so far for the week, but that's only 2 trading days. But the pattern here, the weekly pattern, is still looking pretty positive. And we're looking more positive with our trend charts. The Heiken Ashi is now back to positive. The Kegi chart is now black and pointing up. That's positive. The Renko chart is positive, and the 3-line break is turning positive. So we're seeing some confirmation there. And we had enough of an upward move to draw in a new X with the point and figure chart here. We still are working off of the same positive signal was generated on June 6th, a triple top breakout. Ooh, yeah. So we're coming back to this previous area here. We'll see. The all-time high was set just shy of 6150, so that's why there was not another X drawn in here. Could this be acting as some kind of resistance here, coming back to this previous high? Long term, looking good with the 150 and 200 period moving averages. And still the same here. Still negative in the long term with the mid caps and small caps. Bonds are turning back to positive in the short term. The commodities are now turning negative in the short term. It's probably due to oil there, where the dollar is still negative on all time frames. And we had energy and staples. Staples going down. We like that. That's positive for the market. And energy just getting hit pretty hard. Where we had tech, communication, and discretionary were up. And everything's green or blue here. NASDAQ above 19.7, then 19.8, then 19.9. Woohoo! Canada, another new all-time high. We had a BPI cross back above 80 with the industrial sector, where we had a cross below 80 recently. In communication, setting a 4-year high. Okay, that's pretty good. Industrial setting a 4-year high, and the S&P, it didn't close above this, but it got a little bit above 6,100 later in the day. A lot of green here. Apple was down slightly, but some of the other big stocks, they ended up being positive. Tesla ended up being down, but Amazon was up. Both Google and Meta were up as well. And we're still above the moving average, the 200-day moving average with the Dow. But notice how we came right up to this pivot point, and that was the high. This could be acting as overhead resistance. We're positive with the diamonds with the Elder's Impulse system. We're improving with the NASDAQ, and we're getting above this pivot point here, which could be acting as overhead resistance. We're not quite back to an uptrend yet, but we are positive with the NASDAQ when looking at the Elder's Impulse system. Here's the golden cross. The 50 is crossing back above the 200 for the NASDAQ 100, and that could end up being quite positive. And we're positive with the Elder's Impulse system with the Qs. The momentum is improving slightly, but still negative for the NASDAQ 100. And here's the small caps, just kind of back to where we were before here. What's more interesting is when we look at the Russell 2000 small caps. See how we came right up to the 200-day moving average? Now this is something we'll probably be watching. We came right up to the 200-day moving average and then fell back. Now, if we fall back from here, not a surprise. That's what's happened before. If we break above this, that's going to turn the long-term trend for the small caps to positive. And that can end up being positive. Now, small caps don't lead the market, but when they're doing better, people like that. And so we'll see if that ends up leading into something or if this is going to provide overhead resistance. And we're positive with the Elder's Impulse system for the small caps. A little bit below the 200-day moving average with the mid caps, but we're still positive with the Elder's Impulse system. And the Wilshire had a nice day, up over 1%, finally trying to break out of this range that we've been in lately, and also improving with the total U.S. stock ETF. Financial sector up 1.5%, still holding up. And we look at the ratio, and this is interesting, how we came right down to the 200-day moving average with the financials to S&P ratio. And so far, we've been bouncing back up off of this. And we're above the 200-day moving average with the bank ETF. But you notice how we opened, we set a high, and we closed well off of the high, almost down near the open. It's not a really friendly looking bar, but the positive takeaway is that we're above the 200-day moving average. The FANG index setting another new all-time high. These are the big stocks: Facebook, Apple, Amazon, Netflix, Google, Nvidia. Apple ended up being down, still dealing with its 50-day moving average, still above both moving averages with Amazon. It was up over 2%, setting an all-time high with Microsoft. It's been one of the better performing stocks ever since they came out with their earnings. And Google, a little bit above its 50-day moving average. It was up almost 1%. And Meta, setting a recent golden cross, not an all-time high, but it was up 1.96%. Nvidia getting close to a golden cross here. And Tesla was up, it was down 2.35%, but it's still above both moving averages. Netflix, all-time high, up over 2%. Probably the Microsoft and Netflix seem to have the best looking charts right now. Getting close to a golden cross, but not quite there with the Dow Jones Semiconductor Index. Also improving with the SMH Semiconductor ETF. We're above the rainbow and going up here with that's the same SMH ETF, but just showing the rainbow instead. This is positive. We're seeing semis outperforming tech, and we want this to keep going up, similar to what we saw back in early 2024. If something like that can continue. And we're improving here with the semiconductors growth to Dow value ratio. We're finally breaking the series of lower highs here. And so this ratio is continuing to improve. And the staples to tech ratio continues to decline. That's positive, meaning the tech sector is outperforming. And kind of not really much of a change when we compare U.S. to world stocks on a short-term basis, and still leveling out with the longer-term correlation. Oil back down into the mid-60s. Again, the dollar continues to decline. And we're at 2.16% with the truflation reading of inflation, where the CPI came out with 2.4 in the previous reading. And we're still below the 4.5% level, and interest rates are falling, and we're starting to go below the 200-day moving average. This is also helping stocks if interest rates continue to decline. And we're going up with the 10-year based on price, further above its 50-day moving average. We're above 50 with the RSI, and the momentum continues to be positive. And we are improving in some areas here with the growth to value ratios. The Qs to S&P, that's looking good. Not so good here with discretionary to S&P. Still underneath the declining moving average. A little bit above the moving average when we compare large cap growth to large cap value. So we're coming back up slightly above the moving average with the large caps, looking better here with the mid caps and crossing back above the moving average with the small caps. And for the most part, we're still continuing to decline with the Staples to S&P 500 ratio. That is positive when this ratio is going down. All right, the outlook haven't changed. Still positive in the short, intermediate, and long term, but we're not trending yet. We need more follow through. Not to see 1 or 2 days of a little upthrust and then just kind of trickle sideways or start to pull back. This is incorrect. I'll have to look at the next page here. We're going to get not big for economic reports. The MBA Mortgage Applications Index, we get that every week, and then new home sales. Thursday is going to be kind of a big day. The big inflation day will be Friday. All right, so here is Wednesday, and this is the second day of Chair Powell's testimony before Congress. Seasonality. We looked really bad for Tuesday, and we had a pretty solid up day. Well, we're back to looking more neutral now. We are dealing with the week after options expiration, where we tend to be down more than up. Still have 3 trading days left to go. We're neutral to negative with the Dow, where we're neutral to positive with the S&P and NASDAQ. And we're, at least during a post-election year, we kind of went through that downtime, and now we're coming into a little bit more positive seasonality going into the end of June when you just look at post-election years. And then this is the Carson chart where we came up into the middle of June, and this is seasonally what tends to happen. And now we're kind of getting into that latter part into June where things start to at least potentially look a little bit better going into the end of the month. This is a longer term chart showing the late June, early July weakness is normal. Well, tell that to Monday and Tuesday. We haven't seen that so far. And then we do seasonally typically see a nice little upthrust at the beginning of July, according to the Stock Traders Almanac. With each video and course, members learn to implement the consensus approach, a unique analytical method. Unlike relying on a few indicators that eventually fail, this approach overcomes analysis paralysis by using the weight of the evidence to draw conclusions. Developed over decades across all market conditions, explore the SPX investing program and start with a 30-day free trial. Now, okay, I forgot to take the bracket off here. Disregard this bracket on the screen. Okay, we're still negative with the longer term trend of discretionary to staples, even though we're holding up above the 200-day moving average. The oscillators and the Copic curve, they are still negative. They need more time to turn and actually switch over to positive. And the long-term special K chart is still negative. And the momentum for the NASDAQ 100 is negative as well. Now, here's the proper bracket here. All 3 of our smart money indicators are now back to positive. And we are in an uptrend with the growth to value ratio for the S&P, and both the NYSE and S&P McClellan oscillators and summation indexes are positive again. Parabolic SAR is back to being positive, and the bullish percent indexes are positive as well. The Swindler Trading Oscillator, the Ease of Movement Money Flow, and Ultimate Oscillator are positive. The Vortex is positive, and the financial sector is positive there. So here are the pivot points for Wednesday's session that have already been posted on the YouTube community tab. So the conclusion, no change, just same thing we've been saying the last few weeks here. Positive, but not trending until we see more follow through. Thank you. Have a really good day on Wednesday, and I will talk to you in the next video.